Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, April the 6th, 2016. My name is Doug McKay. I'm the founder and head moderator for Quantum Leap Futures. Each morning we come together to do our pre-market trade plan setup. We take a look at the market macro to micro, the structure of the market, then we drill down to the trade levels, the targets, and our hypotheses for the day. Before we get going, this is a subscription room. So if you want to come in and check us out, I'll put my contact information. Before we do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trading plan, and your own risk metrics. Looks like that long off of 39.50 would be getting funded right here. Let me just put up my contact information. There's no website, there's no blog. This isn't a commercial venture. It's a group of traders operating within a self-organized learning environment. Please send me an email at quantumleapfutures@gmail.com or send me a Skype request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or if you want to watch more of these videos, do a YouTube search for Quantum Leap Futures. There's over 300 days of these pre-market sessions. If you like what we do, follow me on Twitter at Crazy2. So yesterday we were looking for a balancing day in the gap. We opened auction out of range, and basically we had a very, very choppy and balanced day in around that 40-50 microcomposite VPOC, and we just chopped back and forth. All in all, it wasn't a bad day. There was a couple good opportunities. This was a nice opportunity. This Mr. Sneaky setup, and all the way down to 34. And then this one was another good setup. But we were expecting a balancing day in around that 40-50 after coming back down, and that's exactly what we got. Let's take a quick look at news. Today is a Fed day. There's not a lot of news in the morning, but we do have Canadian IV PMI. We have crude inventories at 10:30. Mester's going to speak at 12:20, but the fund will start on the FOMC minutes at 2 p.m. Eastern Time, and whether or not the Fed makes a rate increase or doesn't. I think if they don't, we're going to get a nice pop back up into that 57 and higher. I think we'll go and hit that 71, 72 area and set up for a launch into the 2100s. But that's based on this market being revalued after the FOMC minutes. So each morning I like to start my day the same way. I start with a basic candlestick chart with a 9 EMA, 20 SMA. I'm looking for slope and separation where we are within the trend. You can see beautiful upward trend for the last couple of years on the monthly. Then we start consolidating and challenging the trend. January and February we were below. March we took it back, and so far we're struggling to hold above that 9 and 20 on the monthly. And remember that key level right now below us is the 32.75, and then the 26, 27, 25 area, and then the key line in the sand is still down at 16. But the trend itself is, back in play on the monthly. On the weekly, we've had this parabolic move for the last 7-8 weeks, created a technical gap. We do have a Mr. Sneaky down here at 1983, but a move down to test the 9 will take us down into that 2008, 2006.75 area. But right now the trend is up on the weekly. On the daily, you can see we've had this beautiful trend, good slope, good separation. We've now closed below the 9 on the daily. We're still below it. A test of the 20 SMA take us down to the 20, 30, 50 area. So the trend is being challenged right now, but not violated. Going to the 4-hour, we do have a start of a downward trend after rolling over. There's an ache across above us on the 4-hour at 20.55 1/4. Write it down in your journal. But right now we have what could be the start of a downward trend on the 4-hour. On the 1-hour, we've had a pretty strong downward trend for the last 2 days after making that high in Globex at 71.50, and now we tried to take it back at the end of yesterday and through Globex, and they failed. This is a nice little Mr. Sneaky Tech Gap setup, and we're currently below the 9 and the 20 and have a possibility of continuation trend on the downside. On the 30-minute, you can see that it's a little bit more pronounced, got good slope and separation. We've got a trend starting to the downside on the 30-minute. On the 15-minute, same thing, slope and separation to the downside. And on the 5-minute, same thing again. We tried to take it back, failed, came up, tried to take it back again, and now we're getting slope and separation and continuation pattern on the trend. So the smaller time frames are showing us that we're coming into the RTH session with a downward skew. Going to the big picture, again, I'm repeating myself often lately. We're still in this upper distribution, this microcomposite that ran from October through to the end of the year, where we fell out of the value area beginning in January. The microcomposite LVN is at 2016. We're currently still up in this distribution, this upper Gaussian, but we are seeing some weakness. We worked our way back up towards the key target above, which was the 6150 and the 6350. The 6350 is the microcomposite VPOC from that period, and the 6150 is the composite VPOC going back to 2013. We went up, hit the 69.75 in the Globex, and since then we have failed and come back down into this 9-day microcomposite VPOC, and we're chopping around this 40.50. We're coming down and testing this year open again at 37.75. Key line this morning is going to be the 32.75. Below that, look for them to come back down into between 27 and 25 as a retest and possibly find responsive buyers. I think we're going to make a bit of a move this morning and then balance out. So if we can find some buyers right now to defend the year open, we could pop up into the 45 area and chop around there coming into the Fed. But we don't know. Anything above the 43.75, look for that 45.75, and then the key line in the sand above us is going to be the 48.50. Above 48.50, then I'm looking for a move up into that 57 area and back up into this balance up here in the 57. If we fall below the 32.75, then I'd definitely be looking for a move back down into this 25 area. Anything below 16, I think the interim top is in, and we're going to go in and test the 2006.75, but I would expect to come back actually all the way down here into that 1983 to 1975 area before we get another bounce. But I still think that the Fed is not going to raise rates, and I think we're going to get a move back up into this balance and then a push into the 2100s if the Fed doesn't raise rates. If they do raise rates, then you very easily could be looking down here or down here. So let's take a look at overnight. Again, yesterday we had a pretty decent balancing. Overnight we had balancing as well. Little bit of a double distribution with the LVN coming in here at 45.50. The midpoint is 44.25, just above that 43.75. So I'm going to use the 43.75 up to the 44.25 area, because that's in line with the value area high from yesterday. So I really want to be long above 44.25, and I want to be short below 43.75 if I'm trying to enter a trade there. The overnight high is up at 49.50. Our overnight low, we could be putting in a new overnight low, but right now it's at 39. It's gonna break, and then we got the year open and the value area. 37.75 is going to be my first warning. Below 37.75, I'm looking for the bears to get aggressive and a push down into yesterday's range low at 34.25. I'm not going to change the key line in the sand from 32.75, but I would wait. I'm going to double this area right here so that it encapsulates the range low, because I don't want to be long until I'm back in range above the 34.25. I don't want to be short until I'm below 32.75. Below 32.75, I would target 31.50 as my fund, and then don't really need anything. Let's get the VPOC in here. VPOC is 42.25. Don't think that's going to change. And then we don't need this on here. Expand this out. So we've got the 32.75, the 31.50, and then we've got the 27. Now our daily ATR is running at 21.85 based on the overnight high of 49.50. That gives us a daily ATR down to this 27.25, and this is going to be a trade area as well, because below it I'm looking for the move to 25 and possibly down to this 22.75. Below 22.75, that 19 to 17 area again, and anything below the key support, you've got a bigger move coming down into the 06.75 to 08 area. Return to the scene of the crime for the last FOMC is down here at 2001.75, 2050, and then that naked VPOC at 99. Our weekly ATR target off of the high of the week at 71.50 does not change. Still have range capabilities down to 98.25, and we're only Wednesday. And then the next key line in the sand is at 94. And these targets down here, the next big target's that 83 area, 82.75, and then the 75 area. I got to bring these numbers into play just in case they do raise rates and this thing tanks real quickly. Above us, of course, we've got balance at 40.50, the microcomposite VPOC, the VPOC from yesterday. I mean, we're finding some balance here. The overnight VPOC at 42.25, and then that value area high at 44. Above 44, I target that 45.75. And then the 48 area, and it's 48 to 48.50. And then you've got your overnight high. And then above there, you've got the 51 and 51.50. sorry, 51 and a quarter. And a little bit of resistance at 52.75, but I don't think if we get into the 50s, it's all going to be about, in fact, you know what, I'm not even going to use the 52.75, I'm going to use that range low, okay, from the other day at 54 and a quarter, and then above 54 and a quarter, 55.50. That's not the overnight high. That could come off. We've got the naked close at 57, and the 57.75 goes to 58 and a quarter. Our daily upside target, based on the overnight low, that's just changed. So let me just fix that. 39 plus 21.85 brings us to 60. 60.85, so basically I'll leave it where it is, but the key number here is the 61.50 composite VPOC. Actually, I'll move this to 61 where it should be, and then the 63 and a quarter naked VPOC is also the microcomposite VPOC at 63.50, so we've got that target, and then above there, going to use the range high here at 66.50, above 66.50, 69.75, and then this 71 area, and then resistance comes in at 75 and 77 and a quarter, with the next target up here at 80 and a quarter. Key line in the sand is going to be 86. Anything above 86, I would expect to move to test the 2100. Our weekly ATR target off of the weekly low at 34 and a quarter is 2107.50, and then the rule of 10 at 2110. So I'm expecting a move during the IB to either up into the 45 to 48 area or down into the 27-25 area. And my main hypothesis is a move down to test the 32.75, test that year open, take out the overnight low at 39 right off the bat. If we don't expand it, we still have time. And then a move down here and chopping around the 25-27 area until we hear news. If the news is good, I'm expecting a big pop into the 71.50 area, 71.72. If we do get a raise, I'm expecting a move down into this 06.75 area. My secondary hypothesis is we chop around on the open, then move to test the range high, fail at the range high, and come back down and balance in around the 40-50 area until the news, and then hypothesis remains the same on the news. Any dovish news, I'm expecting a move into the 71s. Bearish news, I'm expecting a move down to the 25 or the 16 or the 06.75. It's going to be interesting. I think there's going to be some opportunity to make some money on the news today. Just remember, trade it in. Don't trade the first move. Wait for the secondary where the first move is. Pull back, and then the main push. That three-wave pattern that has been following the FOMC minutes. So that's going to complete our morning session. Let's just take a quick look at where we are with the Keltner. We are going to come down, looks like, and put another new low in for the night, or for the Globex. Move to the lower Keltner line is going to take us down to 38 and a quarter. Keltner center line is up at the 43.50. Above that, a move to the upper Keltner is going to take us up to the overnight high, up in that 49 range. But looks like they are continuing to see weakness. Let's just take a quick look at the book map. You can see that there is liquidity a lot of liquidity below us down to this 37 area. They have been defending this 37 area. The buyers have been coming in every time we get down in this area, even with that move down late in the day to that 34. Strong buying came in and took us right back up into balance. Not a lot of liquidity above, so it looks like the first move could be to the downside coming into the RTH session. So that's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side.